G'day folks, welcome back to another update for Bitcoin. Now, we haven't done a video for a while only because the price hasn't really made any great advance to the upside or even the downside, although the indicators are showing more of a bearish outlook. So before we go any further, make sure you hit that like and subscribe button to support the channel. First, in terms of the outlook as of today, February 25th, Bitcoin's price stands around 92,259, reflecting a 4% intraday decline. MicroStrategy has expanded its holdings to approximately 499,000 Bitcoins, valued at $47 billion, underscoring continued institutional interest. Kathy Wood of ARK Investment Management highlights Bitcoin's potential as a new asset class, suggesting that institutional adoption is in its early stages. Conversely, debates persist regarding Bitcoin's status as a safe haven asset, with experts citing its high volatility and limited central bank adoption as barriers to its acceptance as a refuge comparable to gold. So we always look at the long-term trends first. We've got the monthly, the weekly, and the daily. So if you're trading on the daily, for example, we look at the weekly trend in particular, or if you're trading on the weekly, we look at the monthly. Now, on the monthly, first off, we've got these moving averages, and these are available in the description below if you want to learn how to draw them on your charts. But basically, the price is very bullish above those moving averages on the monthly, and likewise, the CCI is also bullish. But notice it's pulling back towards those moving averages, hinting at a potential downturn at some point. You did dip into that moving average there previously, around July last year, and that was a result of this consolidation we had previously. On the weekly, now that's already hit to the downside on the CCI. We did have this bearish divergence versus higher highs on the price, and that actually broke down. So if I zoom in, you can see there it's already hit our minimum retrace, Fibonacci retrace level, and where we draw that is we go back to the recent low before that divergence started, significant low, and that's where that 23.38% level was. So it's already hit that range and it's currently sitting in that middle range there at the moment. It could drop further. The CCI is on this is the weekly, the CCI is still dropping, this showing no signs on the weekly. But if we go to the daily, you can see there it's hit that resistance up there at 108.263 a couple of times. And since our last video, it's still declining below the moving average of the price and also below the moving average of the CCI. There's no divergence currently in play. There was a divergence back here. You can see there are lower highs on the CCI versus higher highs on the price, and that pulled back and hit that minimum range before then making further upside. These divergences, by the way, are independent from each other. So the daily and the weekly are independent. They're not necessarily related in terms of divergence. If we go to the intraday chart, if you're trading on the intraday, this is the 1 hour chart. We only take positions in the direction of the daily. So if you're going in this direction, we're going short. So we ignore all the long positions on the 1 hour time frame, and you take short positions. So looking at the latest trade, for example, you would have gone short at when the CCI broke below the, I've got them color coded down here. So when the CCI breaks below the moving average band, and also the price, so you would have gone into the close of that candle, and you close it out when that CCI breaks into that moving average range. It looks like it's going to enter that range possibly the next couple of hours, but at the moment it's gaining 4.07% in 13 hours of trade. A couple of these other ones are false breaks. You can see that you would have got in there and you would have got out with a, it depends where you put your stop loss. I like to put them well above the moving average range, so you might have actually stayed in that trade, and there you probably would have got stopped out on that candle there. So it would have been a 0.4% loss on that one in that little trade there. Or what you can do is have a nerve if you want. You can hang on and wait for it to break to the downside. It depends where you put your stop loss again. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.